Per doesn't need any introduction. He's the smart guy. Per Magnus, what do I say about him? You're one of the few white guys here. Your complexion doesn't give you the protection, but you're good. And Per has been a friend. And I think we all have learned so much from him. Rystad has been an amazing partner, not only to Africa, but to a lot of data and research that has really shaped our industry. And I think the work you do, Per, it's really appreciated by a lot of people here. And I think we are going to hear a lot more from what he has to discuss, especially with around gas. And he's from Norway, so they know something about gas. And then, so if anybody is mad at Norwegians telling us that we shouldn't drill, they're drilling, they're producing. They did 52 licenses in January, right after COP. That was really mean from you guys. Then you come out here telling us not to drill. We are going to drill more. So Per, you go ahead. That's a good introduction. Yeah?
Okay. Thank you so much, NJ. I would like to start in French because I actually lived in France for some years and I have to practice my French just a little. Donc, premièrement, je suis très très content d'être ici à Sénégal et dans la région. C'est une très belle région et vous êtes en train de développer quelque chose de très beau dans l'industrie de pétrole et de gaz. Et je veux aussi remercier tout le monde qui a encadré cet événement, le ministre, bien sûr la ministre Gladima et aussi le président très charismatique que j'ai pris la connaissance hier. Et je pense qu'on a déjà eu une très bonne première journée et j'espère que la deuxième journée sera aussi bien. Donc, and now I'm going to tell just a little about Raster Energy. So we are 500 people, headquartered in Oslo. We do research at a very detailed level on all kinds of energies, a lot of oil and gas, but now we do equally a lot of research on solar panels and windmills and hydrogen and batteries and all these kind of exciting new things. But here in Africa, I think it's much better that we talk about energy addition than anything else. So I think transition rhymes very well with addition in Africa. So that is the theme for my presentation now. It's going to be a lot of charts, a little more numbers than yesterday. And let me see if I am able to kick this off. So should I start just clicking on something here? Or, yeah, exactly. Here we are. Here we are. So what I'm going to talk about for 15 minutes, I will try to stick with the time. First, a little about the energy crisis in Europe, because I think we used the word crisis already a year ago almost, but now it's absolutely an energy crisis in Europe. I also like the word oil transition, because out there in the world there is actually happening quite a lot of electrical vehicles, so we are going to see an oil transition in many parts of the world. And then something that is astonishing me a lot is when I'm looking at the potential need for electricity in Africa. It's just astonishing. So I talk a little about how far the electricity consumption and demand can actually grow in Africa. If you look over the entire century, it's actually quite astonishing. And then a little kind of closer look at the region, of course, on what we see in our research and our projections on the potential for this region. So first of all, about the energy crisis in Europe, and I think that is best expressed by showing the prices, the commodity market prices, starting indexed at 1 early 2020, before the COVID, and then you see how these prices has developed. And electricity and gas in Europe, the blue and the red lines, they are following each other like twins. the electricity price is 100% one-to-one driven by the gas, because that is the kind of marginal cost of energy. And you see that we are at 20 times higher than normal prices. And this is hurting the consumers, it's hurting the voters, and it's a pain for the politicians. And it's going to be worse because we are actually in the low season for gas demand. So the prices we see now is a kind of anticipation of a hurricane to come in the markets. But this anticipation is maybe also the only thing that can actually help the winter electricity situation in Europe. And now quickly into the energy transition. And this chart, it spans over almost 100 years. So that is why you see that by the end of the century, at a global level, yes, even natural gas will finally decline. But coal has already declined. Oil will peak and will stay at a quite flat level. And then due to the electric vehicle revolution, oil demand in the world will finally start to decline. I think there's very little doubt about it, but it might not happen before 2030. But this can only happen by extreme growth of solar panels in the world and wind. And it has only happened, but you see that we are just at a little tiny start of the capacity and the generation from solar and wind, but the cost is coming down, so this is going to happen. And of course it will be some stresses on the supply chain, but the industry will be able to supply this type of growth. But there are various scenarios. So this is one scenario that corresponds to something about a global warming at 1.8. So, and the global warming can be a little warmer, but this is what we think as the kind of likely, but it requires success of technologies and success of politicians to even get to 1.8 global warming. And now looking at the oil consumption, historically driven by growth in various regions in America and then China. And then you have these shortfalls due to recession and the COVID. And then we look at what we see up to 2050 in the various scenarios. And we like to put a temperature name on the scenarios. So the middle line, which we call the mean, corresponds to 1.8. And it takes oil demand quite significantly up over the next 5 years and then stay flat. And then it will decline when electric vehicle sales start to get more visible in actually the fleet of the cars. And for instance, in Norway, where I'm coming from, 90% of the cars sold now are electric. In China, it has passed 20, and I think that so far this year on a global level, we have reached 16% of the sales are electric. And then a little deeper dive into what we see from electric vehicle sales globally. So you see that global sales of passenger cars peaked in 2017 at around 80 million cars sold every year. And at that time, it was almost only conventional cars. And then the revolution of kind of performance of electrical cars. The first electrical cars are really high performance cars. They are quite expensive in America, for instance, where it's not so much incentives. But in Norway, these high performance Teslas, they cost the same as a Passat or a kind of ordinary car, because we have 100% tax on conventional cars, but nothing on electrical cars. So that is what has really driven the growth of electrical vehicle sales in Norway. But you see that we are quite progressive on what we have as a base case on electrical sale, and we think that at a global level we can achieve 50% sales already in 2030. But of course in Africa you will see a completely different situation. There is a large market for second-hand conventional cars, and that is why these looks are kind of off the track from what we see in the streets around in Africa. But seen from Norway or Europe or even Beijing and Shanghai, this doesn't look so much off the track actually. And now something interesting. I think this is one of the greatest chart my analyst has ever produced. And this shows the extreme decline in the existing oil wells around in the world. So if you imagine that suddenly there were no more new wells in any field, how quick will the oil production fall? And it will fall with, by almost 20% globally, something like 18% every year. And that means that already in 2030, 65 million barrels per day of oil will have to come from wells that has not yet been drilled. So the activity in this industry is almost isolated from these decline numbers that you see. I think our kind of drastic electric vehicle projection gives us something like 2% decline of oil demand every year. But you see that we need just a lot of investments. And it's a kind of dangerous that so many around the industry are talking about these stopped investments. You know, they are absolutely, completely off track when it comes to investments in the existing fields and also the developments and also to develop the discoveries. And then when it comes to exploration, it's very clear that all the companies, all the countries, they need a portfolio. They need an inventory, and they have to maintain that by exploration. And maybe if you look, make some fantastic charts about 1.5 degree heating, maybe it looks at a kind of global level in the spreadsheets, not necessary to explore. But it's completely wrong. It is necessary to continue exploring as long as possible at country level and company level to maintain a healthy portfolio. And this chart is a little complicated, but this chart, the black line, shows the yearly production of oil in billion barrels per year, and then we compare that with how much reserves has been either started in new projects or approved in new projects. So the orange line is what has been started, the yellow line is what has been approved or FID'd, sanctioned for development, so all the reserves in fields. And then the green line is all the reserves that has been discovered, and the blue line is all the reserves that has somewhat been available due to licensing activities. And you see that you can explain the historic oil prices very much from what the balance, this kind of reserve replacement. So we see the long period during the 80s where it was less activity than the oil production. Then we got the oil price spike in 2011-13 that triggered a complete overinvestment in the industry. So the reason why we have a crunch of oil price in 2014 and 15, it was the industry itself that overinvested. That is quite clear in this chart. But now we are on the other side. It's a complete underinvestment. There is way too little exploration, and also the exploration has not been very successful. It was actually the drop of discoveries every year started already 2010 because I don't know exactly why, but I think they've started to somewhat go too much into safe exploration, not enough frontier exploration, not enough risk was taken in the industry. And that is also what we see today, that the companies are orienting more and more towards infra-led exploration, but it's not sufficient. So I think that's also a great chart, and it shows the kind of, a little kind of dramatic health of the industry if we try to anticipate the oil transition, knowing that so much investments are still needed. Now, digging into our research on electric power, and this is the outlook for power in Africa according to our research. And this is broken down to coal, oil, natural gas, and hydro, and wind, and solar power. So first of all, we are something like 1,000 terawatt hours per year in electric generation in Africa, in the entire continent. And these, just over the next 30 years, it will surely triple. And this line is completely linear. Most other lines in other regions, they are flattening out around 2050 because of energy economy and population and economic growth is flattening out, but nothing of this will happen in Africa. So this is just a more or less a straight line through the entire century. And that is actually, I think that we, in the continent, and all you leaders, you just have to think long-term on everything you do. Work you do every day, it shouldn't be based on what is happening now or next year, but it's what is going to happen through the entire century. And solar, it's no doubt that solar power will be the solution for the continent in the long term. But you also see the gas. There is no decline on the gas up to 2050 in this chart. And solar power cannot be profitable without having a base and support for natural gas. Otherwise, you will have to invest in storage, and that will actually make the entire solar project unprofitable. So gas is a lubrification for the renewable growth, especially in Africa. Now, some thoughts about why I think it's actually frightening to look into the enormous need for electricity in Africa over the entire century. Of course, population, we know that population will double twice up to 2100. UN just actually updated their projections. They reduced it a little, but still we are talking about quadrupling over the century, from 1 billion people to 4 billion people. And at the same time, the economic growth has to happen. It will happen. A lot of entrepreneurship, fantastic people, a lot of hard work, and Africa will grow the GDP per capita, even in real terms, by a factor of 5 over the century, according to most projections by IMF and so on. And something that is even more kind of frightening and is the urbanization trend. So I looked at some kind of projections of urbanization in the continent, and by 2100, most researchers on population think that out of 25 largest towns in the entire world, 15 of them will be in Africa. And the 3 largest towns in 2100 in the world will be Lagos, Kinshasa, Dar es Salaam, and Lagos can reach 80 million people. And then think about what that will actually means for energy and infrastructure. And at the same time, of course, these people will grow into middle classes more and more over the century. And of course, we have to eradicate poverty, and that will happen before 2030. I think, and here I think that distributed solar panel is absolutely the key enabler if we want to eradicate poverty in the villages as quick as possible. And even in Africa, over this long time period, we will see electrification of the transport sector, even in Africa. But it will take many more decades than in the rest of the world. And heavy industries even will be decarbonized, also in Africa, in the very long term. And then I'm thinking about the enormous need for air condition in the continent with these huge towns. And also, if the global warming is continuing, Africa will be exposed to that. So enormous need for electricity over the next, over this century. And now looking a little at the region. So this is, okay. So this is what we see on gas production on the continent. Right now it's about 250 BCM per year. Our kind of baseline, and the green is the not yet approved fields, and then we have the yet to find fields, the blue. And then this dotted line is if we put all the kind of so-called stranded gas fields that people or our researchers or the industry don't think is commercial yet, then we can actually reach to 500 BCM. But I think that all these stranded fields, they will become commercial because they have to get commercial. So the gas prices will actually reach the level where all these stranded fields will be developed, and I hope for domestic purposes, first of all. And the region, the MSGBC region, I have actually tried to call it the occiput of Africa. It means the backhead, so excuse me for that, but that's a word I found. I think doctors only understand that the occiput is the backhead. But you see that the region will get up now on 100,000 barrels on oil. And with the greater Tortue development, we will reach in oil equivalents 200,000 barrels in oil equivalents. But the potential is actually very, very likely to reach 1 million barrels of oil equivalent from this region. But that will take a decade. But everything I've heard so far just gives me the confidence that this is going to happen in this region. So that was my little introduction to our panel coming up now. Thank you very much.